Ladies and gentlemen, good day and welcome to the Q4 FY25 and FY25 results conference call of Finolex Industries, hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Arun Baid from ICICI Securities. Thank you, and over to you, Mr. Arun Baid.
Thanks, Sagar. On behalf of ICICI Securities, I welcome you all to the Q4 FY25 result con call of Finolex Industries. From the management side, we have Mr. Saurabh Dhanorkar, Managing Director, and Mr. Chandan Verma, CFO. Now I hand the call over to Mr. Dhanorkar for your opening remarks. Over to you, Mr. Dhanorkar.
Thanks, Arun. Good afternoon, ladies and gentlemen. Welcome to the investors conference call for Q4 FY25 and FY25 earnings release. We thank you all for your continued support and interest in Finolex Industries Limited all these years. FIL has registered a modest growth in pipes and fittings volume in spite of weak demand scenario during the quarter and the year. The operating performance of the company is muted mainly due to weaker realization on account of volatility in PVC resin prices. The company's endeavor to grow in the non-agri segment in pipes and fittings is ongoing. Let me now take you through some of the performance highlights. For Q4 FY25, the volume in pipes and fittings segment increased by 2% to 102,253 metric tons against 171,000 metric tons in Q4 24 in spite of the weak demand scenario. Total income from operations was 1,172 crores against 1,235 crores in FY24. EBITDA stood at 171 crore against 209 crores for corresponding quarter. Although EBIT in the segment decreased to rupees 108 crores compared to 133 crores in the corresponding quarter, we have registered significant increase in EBIT per kg trend from the earlier quarter. EBIT per kg was about rupees 4 per kg in Q3 FY25, which has now increased to rupees 10.50 per kg in Q4 FY25. PAT stood at 150 crores against 161 crores in Q4 24. Highlights for the financial year 25 are as this. The volume in pipes and fittings segment was up by about 4% to 347,982 metric tons against 336,577 metric tons in the previous year. This is in spite of the weak demand scenario. Total income from operations was 4,142 crores against 4,317 crores in FY24. Volume in the PVC resin segment grew by about 13% to 222,708 metric tons. EBITDA for the company stood at 476 crores against rupees 584 crores for the earlier year. Profit after tax has increased to rupees 778 crores, including exceptional gains for the year FY25 compared to rupees 455 crores in FY24. The company continues to have a strong balance sheet with a net cash surplus of around 2,535 crores as on 31st March 25 compared to 1,820 crores in the corresponding previous year. We would now like to leave the floor open for questions. Chandan Verma, our CFO, is with me to take some of the questions, and I am here. Please go ahead. Thank you so much.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star then 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Shravan Shah from Dolat Capital. Please go ahead.
Hi. Thank you, and particularly on the EBITDA margin recovery, QoQ. Sir, couple of questions. Couple of questions. First, wanted to understand in terms of the volume guidance for FY26, and also, if possible, if you can share how do you see the industry volume growth for FY26, and if possible for CPVC, what was our volume growth in Q4 and FY25 and volume share?
Right. Basically, as a policy, we don't give exact projections for the year. But overall, this year, considering all the uncertainties, the PVC resin prices going up and down, in fact, from a big dip, now they have started recovering. But the uncertainty still remains. Uncertainty about government policies remains. So it's very difficult to say. The oil prices, there's a lot of uncertainties overall in the scenario. But despite this, I can say that our internal targets which we have kept for our team are definitely a double-digit growth. I would not like to give that as a guidance because, as I said, as a policy, we don't give guidance. We don't see a spectacular year ahead in terms of volume growth, but we would be focusing this year mainly on recovery of margins which had dipped. We are doing a lot of cost-cutting initiatives, and I would say the margin improvement initiatives, whether it goes in terms of better pricing policies, better volume, better product mix. So our focus would be on recovery of margins. As far as the overall scenario goes, we definitely see growth. I would avoid giving any specific percentage. On CPVC, Chandan, can you say what was the exact?
Shravan, year on year, CPVC volume has grown by 17%, and quarter on quarter it was roughly around 7%.
And we see in CPVC definitely a double-digit growth going ahead.
Sir, can we still see our CPVC share around 6-7%, or it is still 5%?
No, still around 5%.
Okay. And now, sir, as you said, in terms of the margin, what we are trying, if all the cost structures, cost reduction, better product mix. So how one can look at margins of this quarter, EBITDA level, 14.6% EBITDA margin. So how one can look at the normalized minimum should be a 14% plus for full year, given the CPVC prices have also, I think, 2.5 rupees has increased in last 10 odd days.
Yeah.
So in that scenario, and plus the ADD and BIS, whenever it will come, so if you can also help, if any timeline as per you.
The ADD, BIS remain a question mark. We are confident that both of them will come. Only thing, unfortunately, from the government side, there has been a considerable delay. Now the court also has told the government to speed up the process. So that will add, but without what I am saying is we are not depending on government initiatives to drive our profitability. Independent of ADD, BIS, we are confident of improving the margins. I would not again like to place a number on that, but the margin definitely, we see a margin improvement. And as we have seen, the prices have gone up, but while the prices of PVC resin, when they went down in the last quarter, we managed to recover the margins because we didn't reduce our pipe prices in line with the resin reduction. And when they went up, we went up more than the resin reduction. So that way we are taking small steps in price recovery, margin recovery. ADD and BIS will definitely, as and when they come, will add to the margins. But that would be, I would say, more like a bonanza.
Got it. So, when we say that it will improve the margins, will it, are we saying from the fourth quarter numbers it will, or from FY25? Because the number is significant difference is there, so that's what just wanted to... So from here on, whatever we have reported in fourth quarter, one can see a improvement on the margin front.
What I'm talking about is from here on. I'm not really looking at the history. History is history. I'm looking at from today onwards what happens.
That's great. That's great. Lastly, sir, in terms of this cash, so we were looking at capital allocation, so 2,535 crore cash. So how one can look at... So two things. One, so currently, last time I think we have spoken that we will be adding another 25,000 ton capacity. So if you can specify the current capacity and what one can look at the addition in the capacity and how we want to utilize this cash, 2,500 crore plus.
The capacity increase incremental will continue to happen with 25,000 we added. It's a total, our total project is 50,000 addition to capacity, which within this quarter or early next quarter we'll complete that 50,000. Partly 25,000 has already happened during Q4 25. The remaining is happening in the next couple of months. Beyond that, obviously, with the market growing, we are looking at capacity increase. But as you know, for the pipes, it's not a very highly capital intensive business. So the capex on the capacity increase will not be very, very high. So all sudden we would be left with cash. And as we have discussed in the last analyst call also, it's a question of time. Again, this is a board's decision, so I cannot really give you any concrete figures or timeline. But finally, if we don't have a very large capex, then it will be returned to the shareholders. But it's a question of time, and it's a board's decision. So I would not like to specify anything right now.
Great, great. Sir, just to clarify, when we say the 50,000 to be added, so currently our capacity pipe would be the similar 420 and fitting is 50, and from there we will add another 25,000. Is that understanding right?
420 will go to 470 and 50 is currently enough, so it will be 520.
Okay. So we will add another 50. So from currently 420, it will go to 470 and 50 will remain the same.
Correct.
Okay. Great. Thank you and all the best, sir.
Thank you, Shravan. Thank you.
Thank you. Your next question comes from the line of Poojan Shah from Molecule Ventures. Please go ahead.
Am I audible?
Is this what a break or a slightly break?
Yeah. Am I clear now? Hello?
Yeah, better now.
Yeah. So my first question would pertains to, so we are hearing that High Court has removed the stay for the SPVC for the ADD purpose. So there is a bit of optimism in the prices which have been seen in the last 4 days. So we have seen almost a 2.5 rupees per kg has been increased. So do you expect the ADD to be, it should be implemented sooner? And if yes, what could be the price implementation could improve the realization going forward?
No, sir, this price increase which has happened in the last week has nothing to do with ADD. This is basically because of strong demand from the market for the last couple of months. The price increase after the ADD is implemented is yet to come, and to be honest, nobody knows when it will really come. If it comes in June, so that will be an independent result of the result of the ADD will be seen independently in the prices. This current price increase is overall there is a good demand scenario. Less stock with PVC resin suppliers, less imports coming in for various reasons. So this is just a demand supply factor. that these prices have gone up. ADD, we are expecting in June, but to be very honest, with the way the government the initiatives are being handled currently, nobody's sure whether it will be June or July. But it will come. We are hopeful it will come.
But in the case of the SC which has been imposed, the stay, so is that removed right now due to it doesn't have any say on the ADD part, due to as the case goes to the DGTR in the Ministry of Finance and there is no say from the Gujarat state. So is that removed or is still prevailing right now?
No, the stay has been removed, so there is nothing, no hindrance left now. So it's a question of procedural now delays, and I don't think they can delay too much now. But having said that, we are already at the end of May, so whether it will happen in June or in July, we have to wait and see. But it will happen now. Now there is no obstacle to that.
Right. And so I just wanted to understand on the second piece is that in the China, we know that 80% of the PVC resins are made by a carbide route, and it is not environmentally friendly. So just wanted to understand there is a hard stop of 2031 that there should be a decrease in the manufacturing of the PVC resin from the China. So do you see that positive impact flowing right now by capacity being shut down and the conversion being happening, or it will take time?
No, that process has already started, but to be honest, more than that calcium carbide route and environmental issues, with all this, once the anti-dumping duties kick in and BIS, more importantly, once the BIS comes in, then China will become a very, very difficult country to import from. So all of a sudden, then the whole scenario will change. So more than the ADD, we are looking at BIS, and which is actually there's nothing stopping the BIS. There cannot be, because BIS mandate has been imposed on many other products. So PVC resin is much lower on the list. Already a lot of products have already got this BIS. And once that happens, none of this resin from China can come in. So that's a very positive. So going ahead, we see less and less threat coming from China.
So just add on to that point. So on the BIS side, you are talking about paste, suspension PVC, right? Not the paste.
No, suspension.
Yeah. Okay, got it. And then my third question would be on the CPVC side. So if we look into it, we know that many of the manufacturers have been expanding their capacity. So domestic procurement will be easily available right now in coming years. Even large giants like Reliance and Adani might adding the capacity coming years ahead. So do you think that realization will impact on a higher side and that should be compensated via volumes? Or do you think that demand supply will be stabilized once the capacity gets on stream via all these players?
No, but the capacity which has been announced and which is on the way is still short of the total demand. So the total demand, even if we take a muted growth of say maybe even single digit, will continue to grow, and all this capacity is still not going to outstrip the demand. So that I think that the dynamics will not change drastically.
But sir, if we considering the one single digit scenario as well, so current demand would be around 250. Let's suppose we assume FY2029 all the capacity gets on stream. So the total capacity, the supply will be around 570, while the demand would be around 420. So do you still feel that there would be much advantages, because might be one of our company is just shifting that plant, that demand would be shifted to over here, and that could be around 420 supply. So that would be stabilized there. So that's the demand dynamics which we have been looking into.
No, sorry, I didn't get the question. The shifting, I didn't. Who's shifting the plant?
Lubrizol.
Sorry?
Lubrizol.
Oh, sorry. I completely misread your statement. You're talking about CPVC.
Right.
Okay, yes. Okay. Sorry. So I was talking about SPVC. No. So CPVC, there would be. See, it is getting more and more commoditized now. So with Lubrizol shifting the plant here, Epigral growing, you're right. Reliance also might get into it, DCW talking about this. So availability of CPVC is definitely on the increase. And earlier, in fact, production or the growth of CPVC was constrained by capacity because getting the raw material was a constraint, which is slowly going as we go ahead. That's not going to happen. So today, the special status that CPVC enjoys, we believe that going ahead, it is getting more and more commoditized. On the manufacturing side also, a lot of players have got into CPVC. So the super margins which prevailed at one time have already softened a bit. They would still always be better than SPVC because of the technology angle and because of the very low level producers not being able to enter the market. But going ahead, I think demand supply will play the role in pricing as it does in SPVC.
Just wanted to add on that part. So in the CPVC space, as you rightly said, the margin might squeeze it. So it might impact the realization in the pipe segment as well as the price of RM gets commodity. Yeah, it gets impacted. So do you think that our future growth, which we are expecting a double-digit growth in the CPVC segment, would be compensated more on the volume side as the realization gets squeezing when the capacity gets on stream?
Yeah, the volume, it will come from volume. Today also, despite much muted business scenario for FY25, our CPVC volume grew by 17 or 18%.
70% year on year.
70% year on year. So we have been able to grow, and so that market itself is growing. It's not that only we have grown. And this would come more from volume. So going ahead, we see substantial volumes coming from our CPVC, and this the mix also we see improving greatly towards double digit.
And just last question on the bookkeeping side. So can you just spell the realization currently on PVC, CPVC, and the spread between PVC and VCM?
And then do you have it offhand?
We have the number. See, generally we do not disclose the number on a realization per ton basis. The overall number that we have disclosed, that is there in the public.
Okay, got it, sir. Thanks for the opportunity. I will get back in.
Thank you, Pujan.
Thank you.
Thank you. The next question comes from the line of Sonali from Jefferies. Please go ahead.
Sir, thank you for the opportunity and congratulations on a great set of margins.
Thanks,
So my first question is on the resin side. So despite the PVC resin dropping by almost 18% in FY25, I think on a full year basis you have posted a brilliant expansion in your resin EBIT margin. So could you help us understand more as to how did we arrive at such a great number, as in what has structurally changed within our business, or is it just something that we did in the interim?
No, there's nothing actually, to be very honest, we can do at the plant level because that's a running plant and it's a petrochemical plant. So it's not that doing any tweaking this, and the prices are driven by international prices. So basically the delta in the PVC and EDC prices internationally is what drives the margin, and that has been favorable between EDC PVC and VCM PVC. So it's mainly a question of, I think, the international prices. I would not like to take any great credit for more efficient operations or anything.
Understood, sir. And if I may ask as an extension to the same question, in FY25, what proportion of our production of PVC resin came in via EDC and what via VCM?
Do you have it, Chandan, offhand?
Out of total production, roughly, 1 second. 55% came from the EDC route, rest came from the resin route.
VCM route.
VCM route,
yeah.
Yeah. So my second question is regarding the demand scenario presently. Now we understand that, from Q1, the initial April month as well, there was some softness in the PVC resin. And right now, as we are seeing, there's strong monsoons across most of the parts of India, so which is sort of inversely proportional to the usage of agri pipes. So considering that this is one of your key summer quarters, and we are, witnessing all these, characteristics in terms of demand and PVC resin prices, how would you rate the demand right now and also the channel inventory of the agri pipes?
Right now, in fact, April and May have been very strong months for us, both agri and non-agri. In fact, till the rain started couple of days ago, we have been completely sold out on inventory. We are running very low on inventory. So the channel, despite the channel not carrying too much of inventory, we pushed out everything. The channel pushed out to the end user. So as of now, despite the push from our side, channel is not carrying too much of inventory. With the rains now starting, obviously the demand will slow down. We still have to take a call whether this is a long spell of monsoon which is already started, because we saw in the last almost thrice out of the last 5 years, we saw that the monsoon starts in June, then there is a long lull for about a month and a half, and then it resumes. So if that happens, then the demand will pick up again, because to be honest, this was a little unexpected for the farmers also. So some of the activity is still not complete. So if after a week or so there is a lull, then we see a strong demand pull coming back. If this continues, then obviously agri pipe season, because you can't lay the pipes during when it is raining so heavily. So I don't know whether I can answer your question very emphatically, but to be this till today we are on Monday, maybe till Wednesday, Thursday we have had very, very strong demand from the agri as well as non-agri side.
That's pretty clear, sir. So, and my last question, of the full year volumes, how much of that would have come from agri versus non-agri, as in what percentage volume growth in agri division versus non-agri in F25?
So FY25, our agri to non-agri was 67:33.
Yeah, so your full year volume growth is about 3%.
Yeah.
So in the full year, how much would be the agri growth and how much would be the non-agri growth?
Agri volume more or less 2% in terms of totality, and non-agri around 9%.
Understood. So thank you and all the best.
Thank you, Sunali.
Thank you. Your next question comes from the line of Udit Gajiwala from Yes Securities. Please go ahead.
Yes, sir. Thank you for taking up my question and congratulations on your recovery in margins.
Thanks.
So firstly, if I may ask, just to follow up, when you said that the demand is strong for these 2 months, especially last month, if you can, then is it purely because of restocking, or is it some end demand in some particular stage that have commenced, or is it related more to pre-monsoon? If may, allude more on it.
Yeah, this is more, basically pre-monsoon kind of this. Because if you have seen the last few months when the PVC resin prices were dropping, people delayed their purchases to quite some extent. But ultimately there comes a time when what is needed to be bought will be bought. So this was, in fact, the demand was strong despite the resin prices had still not kicked in. There was still uncertainty about it. Now with this 2.5 rupees increase, now suddenly there is a rush from people for the last day. But that's a different scenario altogether. So coming back to your question, the demand came from actual users. It's not that the channel is stocking up too much of inventory.
Got it, sir. And in terms of our price differential versus peers in the non-Western markets, where I understand that the Western region is one of your strongest zone. But in other markets, what will be the price differential that you have versus the peers?
Difficult to answer that because I would not like to take any names, but some of our large competitors have a different pricing policy in different markets, different pockets. So it changes from, pocket to pocket, district to district, state to state. And we, to be honest, we don't really play the price game very strongly. Beyond a certain limit, we depend on our brand and the quality. So I would not be able to give you a clear answer about what is the price difference. Sorry.
Understood, sir. No worries. And lastly, you mentioned in your opening remarks that focus is more on margin. One of the reasons is one of the ways would be through product mix and some cost control. So could you elaborate more on what kind of cost initiatives are we taking? Is it right?
No, basically, see, it's not a rocket science in our pipe and fittings industry. You improve the operating ratios. That is what we are doing. You reduce the scrap percentages, and these are some of the things with very tight controls, with very tight monitoring. Some outside help from TPM consultants. So some initiatives are being taken. I won't be able to give you too much of details because obviously everything is not for the market. But I would just to summarize better efficiencies. On the buying side also we have got some better pricing now from some of the suppliers based on volume commitment. So we have changed some buying pattern. So everything adds up a bit. So there is a very clear focus at the beginning of the year. We have taken that this year would be a year of margin recovery.
Understood, sir. That's it, sir. Thank you and all the best.
Thank you.
Thank you. Your next question comes from the line of Ritesh Shah from Investec. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity and congratulations for a good set of numbers. Hi, sir. Sir, the first question was, currently PVC resin prices are at 70 rupees, 71 rupees. Sir, hypothetically, if the anti-dumping duty comes in, where should we expect these prices to stabilize at? Is it like 75, 77, 80? Because the range of anti-dumping duty across countries is very, very wide. So how should we understand this? That's the first question, sir.
See, basically, one is the anti-dumping duty and the advantage which we get immediately because of that. But on the other hand, we also have to wait and see whether some of these countries on which anti-dumping is imposed are able to absorb part of that by lowering their prices. So that's why it's a very dynamic situation. There would be a recovery, definitely anywhere between 5 to 10%. But to be honest, to put a finger on the number would be very difficult because not the entire anti-dumping duty, we just can't take a mathematical average of all the countries and then put a number and it will be something which the larger PVC resin producers will keep trying a portion at a time and trying to push it through the market and see how the suppliers react to that.
Sir, how did you come to the number of 5 to 10%? Is it possible to comprehend that, please?
Sorry?
Sir, you indicated that a price increase could be anywhere, say 5% or 10%. How do we arrive at that number of 5% or 10%, sir?
So that is based on the import pattern and what can go through. This is an estimate by the industry. 10% I would say would be very, very ambitious. 10% would be something like 6 to 7 rupees. But 3 to 4 rupees is something which I think is definitely which can go through. So as I said, it can be anywhere between. So you can, if you want to place a range, it can be between 3 to 6 rupees.
Sir, is it fair to assume that this 2.5 rupees which has happened over the last 7 days, 10 days, is already part of this 3.5, 4 rupees that one can possibly expect?
No, that has nothing to do with anti-dumping, no. Because nobody knows when the
Correct. So how should we read into this last 2.5 rupees, 1 and 1.5 rupees of increase? Is it because the imports have dried out and hence the price uptake, or is it like the demand has really shot up? That's the reason why price
as I said, demand has been strong for the last couple of months. Plus, there have been production cuts because of maintenance shutdowns at the domestic producers level as well as some large international players. So the imports have dried up or reduced, I would say. There was very low inventory with the large PVC producers. So this is and this is nothing to do with anti-dumping. So this was purely a demand-supply gap, which so whether this can be sustained is the question over the long run if there is no anti-dumping duty. As of now, yes, looks sustainable. But suppose theoretically there is no anti-dumping duty for the next 4 months, and then monsoon kicks in, then maybe there is a question mark whether this can be sustained. So this is purely a current demand and current supply scenario playing out.
Sure, sir. This is helpful. So secondly, as we look into the next fiscal, do we have any plans to launch any new product categories, any new product lines, and anything on geographical expansion if we are targeting anything?
No, as we discussed in the last analyst call, the geographical expansion is something we are working out at the back of this, but even in the last call I said at least for the next 6 months you will not hear any announcement about that. Currently, our philosophy we have already spelled out in the past also is to first squeeze out every possible efficiency from the existing plants. And all our 3 plants have adequate possibility to increase the production by just replacing the old capacity, smaller capacity machines by higher capacity machines. The manpower remains the same, the overheads remain the same, and you just get almost double the production from the same space, from the same real estate or from the same manpower. So our focus always has been to first squeeze out every possible efficiency there, and then look at expansion. So we still believe that there is a scope for better capacity at the existing. Whatever the next immediate round of expansion which comes after this 50,000 tons, definitely brownfield would be option 1. Then option 2, we are still contemplating, but it's too early to make any announcement right now.
Sure. And so just last question, would it be possible for you to quantify our total fittings capacity and what part of it is for outsourcing? And a related question, sir, earlier we had plans at Ratnagiri, given we have 2 ways to produce resin EDC, ethylene and VCM. Do we have any plans to further backward integrate specifically the VCM line, or is it entirely on the back burner? Thank you so much.
Sorry, what was your first question? Because I missed that.
Sir, fittings capacity. What is our total fittings capacity?
Yeah, fittings, Chandan will give the breakup, but I would just like to clarify one thing. When you say outsource or when you say in-house, it is not in the conventional sense outsource. You can say outsource if I am buying from somebody who is also giving to me and giving to auto component manufacturers and giving to somebody else. Whatever capacity when we say it is not within our owned premises, that is still entirely controlled, driven, everything by us. So I personally don't really subscribe to this theory of in-house capacity and outsource capacity. But having said that, Chandan can give you the numbers.
So Ritesh, our total fitting capacity is 50,000. Roughly it consists of 1:4, roughly. 1 is in-house, 4 is the dedicated outsourced contract manufacturers.
Sure. That's perfect. And so lastly, on the PVC VCM extension, anything on backward integration at Ratnagiri?
No, nothing immediately. We are still, as I said, still under study. We have not. I won't say that it will never happen. It does definitely make sense to push through that, but you will not again. I don't think hear any announcement in the next 6 months about that.
Sure, sir. Thank you so much for the answers. All the very best, sir. Thank you again.
Thanks, Ritesh.
Thank you. The next question comes from the line of Sneha Talreja from Nuvama. Please go ahead.
Hi, sir, and congratulations on great set of numbers. Just two questions from my end. One is related to industry demand. Leaving apart the PVC price increase and decrease, and leaving apart the restocking part of it, what is the, in general, PVC plastic pipe industry growth rate that we are forecasting over the next 5-6 years?
The CAGR has always been about 8 to 10%, and there is no reason for that to change drastically, either lower or higher. So we expect that close to double-digit trend to continue, both on agri as well as non-agri side. So for our internal calculations, we take little above 10% growth.
You are talking about 10% growth in PVC plastic pipe industry only. This has been the past 10-year CAGR.
No. PVC pipe, plastic pipe industry as a whole.
Understood, sir. Second question was related to other new segments. I understand you are looking at capacity expenditure program, and you are working on it. But are new products such as OPVC and silent pipes, fire pro pipes, are all these kind of pipes being considered, or is it the expansion only in traditional categories, be it PVC or CPVC, which are planned at this point of time?
At this point of time, it is still existing conventional pipes, OPVC, silent pipes, on the study table, but nothing concrete to be announced yet.
Understood. And lastly, one clarity, if I see your PVC EDC spreads at this point of time, the spreads, if I'm not wrong, have declined by 5% QOQ. At the same time, you have seen a great amount of margin expansion. Has those cost-cutting measures already been incorporated in this particular quarter only, or are we missing out on something?
No, Sneha, can you repeat the question once again, please?
If I look at your last quarter's PVC EDC spreads, that was about 517. This particular quarter, I see it 491. But there is a strong QOQ recovery in terms of your plastic pipes, margins. So I just wanted to understand, is the cost-cutting measures already incorporated, because of which you have a sharp increase in margins? Because, PVC prices the entire quarter were on the downward trend, leaving apart the last two price hikes, which have been, post the quarter end.
You're talking about the PVC, the pipe segment?
Yes, pipe segment margins expansion.
In fact, I don't know whether you attended the last analyst call, but in that I had mentioned that there was to use a bad word, price war kind of a situation in Q2 and Q3, and because of which the margins had taken a massive beating. And then that time itself we declared that we would steadily take the margins up. And so this is basically not so much on the costing side. The cost initiatives have started last quarter itself, but that is still to kick in. This is basically because of one, better product mix, and two, more importantly, better pricing decisions that we to which markets to focus on, which products to focus on, and what discounts we are willing to give, and what business we are willing to give up if the margins are not good enough. So it was purely a basic better pricing strategy, I would say, and which is a more sustainable long-term kind of a this. So there was probably some aberration in the pricing strategy in the earlier quarters, which got corrected and which is getting corrected further now.
Understood. You also mentioned that price was last quarter. Referring to the scenario, is the pricing strategy opted by the large player now done with, and are you seeing some stability in terms of pricing, across the players?
Yeah, there is a stability now. This happened, I think, in last June, July, August, or something that time. But yeah, now we see stability. And anyway, we decided that we will not be part of any of these things. So we will, based on our brand stability and our brand image, we will continue to whatever our brand justifies. We'll continue to get that price. And we are seeing that improvement immediately in the market.
Understood. And can you just lastly speak about the PVC VCM spread? I don't have that handy.
So as of now, PVC EDC spread is around $490.
VCM she's asking.
PVC VCM is around $160.
$160. Understood. Thanks a lot, sir, and all the very best.
Thank you.
Thank you. The next question comes from the line of Vipul Kumar Anupchand Shah from Sumangal Investment. Please go ahead.
Yes, sir. What was the PVC VCM spread last quarter, sir?
PVC VCM spread was 174.
174. So it has improved to 190 right now.
160.
No, I'm talking about current spread.
Current spread I'm telling you.
160.
Yeah.
Okay, sir. Thank you.
Thank you. The next question comes from Shravan Shah from Dolat Capital. Please go ahead.
Thank you for the opportunity again. Sir, CapEx for FY26 would be how much?
Roughly around, we have planned 120. Yeah.
Sorry, 125 crore.
Not more than 150, definitely.
Okay, 125 to 150.
Yeah.
Okay. And sir, also just I wanted a clarity. The staff cost for this quarter was 51.3 crore versus for last 3 quarters it was around 57 odd crore. So is there any one-off in this?
No, it's not exactly one-off. See, there are a lot of year-end valuation is required to be done. So because of that, it's a more or less impact of that, cascading impact.
The commission can become more.
Okay, so going forward, is it fair that our staff cost will again come back to that 57 crore kind of a quarterly run rate?
Yes.
Okay. And then second, obviously we have a significant cash, and that's why our other income has also this quarter has gone up to close to 65 odd crore, and for full year 247 odd crore. So till the time we decide that this money to be returned to the shareholders, this kind of a run rate on other income front likely to continue.
Yeah, it's a more of the result of how the market is performing. So based on that, the things these numbers are coming.
But more or less similar.
More or less similar in nature.
Okay, got it. And just sir, if you can again clarify in terms of the currently for FY25, when we say the 5% CPVC share, does that mean that broadly the entire industry would be a 2.5 lakh ton kind of a yearly number?
Yeah, around 260-270.
Okay. And then including everything PVC, it would be a 44 lakh ton.
Correct.
Yeah, PVC is roughly around 4.1 million ton. Yes. 4.1 million ton is that total India demand.
Okay, got it, sir. Thank you and all the best.
Thank you. Your next question comes from Pujan Shah from Molecule Ventures. Please go ahead.
Thanks for the opportunity, sir. So my first question pertains to, let's suppose the AGV does get implemented.
Your voice is not coming.
Your
voice is breaking.
Voice is breaking.
Am I clear now, sir?
Yeah.
So my first question would be on the, let's suppose the PVC prices right now, what has been inch up, it remains the same. Assuming the EDC VCM prices also remains the same, do you feel that EBITDA margins could be in the range of 10-15% easily going forward, assuming the similar situation for FY26?
So Pooja, let us not put any number on the margin percentage. Let the things, because there are various dynamics that decide the margin. So we are not willing to put any number on the margin at this moment.
Okay, sir. Got it. And sir, right now you say the realization, so the spread between PVC and VCM remains at 160, while quarter ago it was 174. So what has been impacted the margin specific to that? Because ultimately the EDC has been inched up a bit. So what happened to the VCM part? So why the VCM spread has been narrowed down?
No, sir, I think what Chandan is saying is that 160 is this month's spread.
The latest one, not the year end. Current sitting on today's date.
So that if you see a long term this also, month on month it keeps going up and down. PVC goes up, PVC this goes down. If PVC has moved up and VCM takes time to move up, the delta increases. If PVC comes down and VCM stays there, the delta. So month on month it's very I think not correct to look at it as a trend. Basically, if you see a quarterly or a half yearly or a yearly trend, there is nothing, the dynamics have not really changed drastically. So month on month, it will always change. There is no particular.
So considering year on year, it would be around 160 range, the spread.
No, 160 remains today. Going ahead, we see it similar to last year. There no dynamics. We don't expect to change dramatically.
Okay, got it, sir. And my second question would be on the last call as well. We have been mentioning about the OPVC, and it is not so we are not being keen to grow and enter into that space. So what are the key reasons you have been looking into for the because ultimately other players also I understand the segment is too small to right now, but other players are very optimistic about this product. So what are the key thought about this specific to OPVC?
No, basically, as you rightly said, the market is still quite small, and it's not as if there is a 5-year, 3-year gestation period once we decide to get in. It's not that you have to put up a huge greenfield facility. So the day we feel that the market is right, we already have the brand, we already have the distribution network. It's a question of 3 to 6 months when we can enter the market. So we're still on the wait and watch approach. We are not saying that we will not enter it. But right now our focus, as I said, has been on various initiatives. So the management bandwidth right now is not on OPVC. We'll get into it when the opportune time comes.
Okay, got it, sir. That is from my side.
Thank you. Thank you.
Thank you. Next question comes from Madhav Agarwal from SG Investments. Please go ahead.
Hello. Hi, thank you for the opportunity, sir. Just a couple of questions. Can you tell me what's the current market share for Finolex?
Current market share for the Finolex as a percentage of total PVC pipe market?
Yes, sir.
It's about, see again, between organized and unorganized, we look at share of the organized market. Chandan, you have the number right now?
Hold on for a minute. I'll park this question. You continue. I'm telling you.
Okay. Secondly, sir, you had mentioned that our aim is to take the split between agri and non-agri to 50 and 50. And currently it's at 67 to 33. So just wanted to know what are the steps we're taking to achieve that 50 to 50 level.
So basically, these are all obviously long-term measures. One, I can tell you one significant step which is driving. If you see, last year also our growth in non-agri was much higher than the agri growth, and which we expect to continue that way. One significant step is that we were practically absent from the projects market. We were depending entirely on the retail network, and the large projects, the Lodas and the Hiranandanis and the Sobha developers of this world, we hardly had any presence there. So last couple of years we have taken, we have a completely different team for projects business, which focuses only on these initiatives, and that's yielding very strong results. So we are now there in almost, I would say 60 or 70% of the top 100 builders we are already there. That our share is increasing. And besides that, within the retail segment, also we are taking a lot of initiatives like reaching out to schemes for retailers, for plumbers, which earlier we were not doing so in a focused manner, which also we are doing. And that is yielding results definitely. So traditionally we were always an agri player and we played the market from that perspective. Now we have completely different teams for agri and non-agri, and that's yielding results.
Just to add, Madhav, in terms of our share in the PVC pipe segment, see, there are two segments of PVC pipe manufacturer operates in India. One is the organized sector and another is the unorganized sector. So since the data of the unorganized sector is generally not available, so we compare ourselves with the largest share. So out of the largest share, we are roughly having a share of 30% around market share.
Understood. Thank you so much. That was all from my side. Thank you.
Thanks, Madhav. Thanks.
The next question comes from the line of Karan Bhatelia from Asian Market Securities. Please go ahead.
Hi, good evening. Am I audible, sir?
Yes, Karan.
Sir, just wanted to understand what could be the fittings volume growth in the entire year. Percentage could be helpful.
Last year we had a muted growth, to be honest, more like 1 or 2%.
And PVC, if I heard it correctly, FY25 volume growth was 17%.
Correct.
Right. And sir, since the focus now remains more on the non-agri side, what kind of expansion have we seen on the SKU base or sales marketing efforts in this year, and how do we see that in next 2 years?
Yeah, the one as a SKU base, of course, we keep on adding every year 100, 200 SKUs. So I don't have the number right now with me how much we added last year, but that's an ongoing as and when the market requires, we keep on adding. Today we have more than 1,500 SKUs. Exact number, unfortunately, I don't have right now. And initiative, as I said, for the non-agri, I just emphasize the earlier question, that the projects business, the reach out to the retailers. We have now a large digitization program going on where we have visibility on the inventory with the retailers. We have direct outreach with the retailers. So a lot of these digitization reach out programs, plus to a great extent, the projects business is adding out to our non-agri.
Right. And have we also separated the project team from the retail team? Like, is the focus on projects too?
Yeah, that's a completely separate team. They don't even look at the retail business. They are completely on the project side.
Right. Yeah, thank you. Yeah, that's it.
Thank you. The next question comes from Vishal Shah from Sameeksha Capital. Please go ahead.
Am I audible, sir?
Yes, Vishal.
So on the question regarding, sir, we have 2,500 crore cash on books and the board will decide. So as the matter is going on since last more than couple of years, so when can we expect the same? As we are not doing much capex of 125 to 150 crores, so can we expect in the next 1 year or so?
No, Vishal, it would be not only unfair, it would be illegal for me to answer that question, because that is a question which only the board can take a decision. But I can say one thing, the management is fully aware that yes, this is a money we are holding on behalf of the investors, and if we don't use it adequately for the business, we are obliged to give it back to the investor. So the board of directors, the management is sensitive to this issue, but it would be unfair for me to put a timeline on it, please.
Okay. And sir, the second question, can we expect any sale of, like last year in Q1 we sold the property, so can we expect the similar line of sales of the additional property that what we have and exceptional item in the current year also?
No, I don't think we plan to sell anything now.
Okay, fine. Thank you, sir.
Thank you.
Thank you. The next question comes from Madhav Agarwal from SG Investments. Please go ahead.
Hi, sir. I just had a quick follow-up on my earlier question. Just wanted to know the split between the retail and project business.
No, the retail, the project business for us is, in fact, we just started, as I said, the whole concept started a couple of years back. This year we have done well, but I think it would be still project business only 10% of the retail business. There is scope for growth, but yeah, today we are not where we would like to be.
Understood. Thank you. Thank you so much.
Thank you, Madhu.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you everyone for attending this call today. And if you have any further questions, you can always reach out to us by mail or by telephone, and we'll be happy to answer. Have a wonderful day. Thank you again.
Thank you, everyone. Thank you for your participation.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you.